Hey everyone, welcome back to Corporate Decoder, the place where we break down the big corporate secrets. And let me tell you, VisionWave Holdings might have just made a deal that adds a whole new chapter to their story, something that could shake things up pretty significantly. So, what's the big news from VisionWave Holdings? Well, on July 25th of 2025, they announced a new agreement that's pretty important. This is all about their common stock, the basic building blocks of ownership in the company. And they also have these things called warrants. Think of them like options to buy their stock at a set price, which is 11.1050 cents here. Now, VisionWave is calling itself an emerging growth company. This usually means they are a younger company still growing and get to follow some slightly different rules than the really big established players when it comes to reporting. Let's dive into the main event. VisionWave Holdings, or the company as they call themselves here, has entered into something called a Standby Equity Purchase Agreement, or CPR, with a group called YA2PN Ltd. This CPR is essentially an agreement where VisionWave can sell up to a whopping $50 million of its common stock to this investor over time. It's like a flexible credit line for stock sales. Here's where it gets interesting. When VisionWave decides to sell shares under this agreement, they don't just pick a price out of thin air. The investor will buy the shares at 97% of the lowest price the stock hit over a 3-day period, starting from when VisionWave tells them they want to sell. This is called the daily VBOP, or volume weighted average price, so they're going to sell stock at a discount to the market price, which is pretty common in these types of deals. But VisionWave has a safety net. They can set a minimum price. If the stock dips below that minimum price during those 3 days, they don't have to sell any shares at that lower price. This protects them from selling their stock too cheaply. As part of this deal, the investor is giving VisionWave $5 million upfront, but not in cash directly. They're giving it in the form of convertible promissory notes. Right away on July 25th, VisionWave received $3 million of that $5 million. The remaining $2 million will come later, once certain paperwork like a registration statement is approved by the SEC. And even for this upfront money, VisionWave is getting it at a discount. They're essentially getting 94% of the $5 million value. So if they get the full $5 million, they'll only owe $5 million in principal, but they effectively receive less, meaning the cost of capital is higher. These notes also come with interest. It starts at 6% per year, but if things go wrong, like if VisionWave defaults on the agreement, that interest rate can jump all the way up to 18%. That's a pretty big hike. Now, the convertible part. The investor can choose to convert these notes into VisionWave stock. The price they'll pay per share is either $10.93% of that 3-day VWAP, whichever is lower. However, there's a flaw. They can't convert these notes if the price drops below $1 per share. This protects the investor from converting into stock that's essentially worthless. There's also a clause about triggers. If the stock price stays below that one floor price for a certain number of days, or if VisionWave uses up almost all the stock available under the agreement, then VisionWave has to start making monthly payments to the investor of $750,000 plus a 5% premium and any unpaid interest. This is basically a penalty or an alternative repayment structure if the stock performs poorly. VisionWave can avoid these penalty payments if they get shareholder approval to issue more stock than originally planned, more than about 20% of what they have outstanding. This is to comply with NASDAQ rules, which often limit how much stock a company can issue without shareholder consent. And here's another twist. The investor can decide if there's still money owed on those notes to request shares directly from VisionWave using the notes as payment. This is called an investor advance. This is important. The investor can't take so many shares that they end up owning more than 4.99% of the company's total outstanding stock due to ownership limits typically put in place to avoid certain regulatory issues. So usually VisionWave gets to decide when and how much stock they sell, but with those investor advances, the investor gets to call the shots. This whole agreement has a time limit up to 24 months or until VisionWave has sold the full $50 million worth of stock. VisionWave can also end the agreement early if they give 5 days notice, but only if they've already issued all the shares they owe and paid back everything they owe on those notes. To get the investor to agree to this deal, VisionWave paid them a $35,000 structuring fee and also gave them 200,000 shares of their stock as a fee. That's a nice chunk of extra stock for the investor just for signing up. On top of that, there's a $500,000 commitment fee. Half of it is due fairly soon, and the other half will be paid in stock based on the stock price at that time. So VisionWave is paying a pretty penny to have this funding source available. Like most big agreements, this one has standard clauses covering things like promises, guarantees, conditions, and who's responsible if things go wrong. The actual amount of money VisionWave will get from this deal really depends on how often they decide to sell shares and at what prices. They plan to use the money for their day-to-day operations and general business needs. This next section is important because it confirms the financial commitments made in the previous item. Basically, everything we just discussed about the sepia and the convertible notes also falls under this section, highlighting the new financial obligations. This part tells us how these sales are being handled legally. VisionWave is selling these shares to an accredited investor. This is a legal term that means the investor meets certain income or net worth requirements, which allows them to participate in this type of private offering without the full registration process. They are using a specific exemption from securities registration laws known as Section 4AG2, which is for private offerings to sophisticated investors. This is where they list all the official documents that back up this report. This is the main agreement we've been talking about, the SEPIA. This is the document detailing those convertible notes that come with that $5 million advance. This agreement likely spells out the process for registering the resale of shares, which is crucial for the investor to eventually sell the stock they receive. There's also a guarantee from VisionWave Technologies Inc. This suggests that a parent or related company is backing this deal, which could mean they're trying to provide some extra security for the investor. And finally, the official sign-off. The report is signed by Noam Koenig, who is the Chief Executive Officer of VisionWave Holdings. So what's the takeaway here? VisionWave Holdings has secured a potentially significant funding facility of up to $50 million. This gives them flexibility to raise capital by selling their stock as needed. The upfront $5 million in convertible notes provides immediate cash, but it comes with interest and the possibility of conversion into stock at a discount. The SEPR allows them to tap into the remaining $45 million over time, but the way the pricing is structured, they'll likely sell stock at a discount to the market price. This is a common strategy for companies that need capital but perhaps can't get it through traditional bank loans or equity offerings at current market prices. It's a way to get money in the door, but it can dilute existing shareholders if done aggressively. The investor, YA2PN Ltd, is getting a pretty sweet deal. They get a discount on the stock they purchase, both in the initial convertible notes and through the SEPA. They also have the right to trigger sales themselves through investor advances, which could be a way for them to exit their investment or gain more control if they see opportunities. The 4.99% ownership cap is a standard protection to avoid certain reporting requirements. The fact that a subsidiary is guaranteeing the deal also suggests that the parent company is serious about supporting this financing. For VisionWave, the big question is how they'll manage this facility. Will they use it judiciously, raising capital when market conditions are favourable, or will they rely on it heavily, potentially diluting their shareholders significantly? The success of this deal will depend on their ability to grow the business and increase the stock price so that the discounts they offer are less impactful in the long run. If the stock significantly underperforms, the penalty payments and the discount on conversion could become quite burdensome. Now, looking at these results more broadly, VisionWave appears to be in a growth phase where securing flexible, albeit potentially dilutive, financing is a priority. The SEPI itself is a strong indicator of their strategy to access the capital markets for growth initiatives. The risks here mainly revolve around dilution for existing shareholders and the cost of capital, which can be higher with these types of agreements compared to traditional financing. The company is clearly trying to position itself for future success by securing this funding. The key will be execution and how they manage the dilution. If they can use this capital to fuel significant growth and increase shareholder value, then this deal will have been a success. If not, it could be a costly way to raise money. Alright, that's our breakdown of VisionWave Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this is a smart move or a sign of trouble? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out our Discord community linked in the description below for more discussions. Thanks for watching. See you next time.